Hi there, it's Gary from Virtuo, and today we are joined by Jesse Abrams, who is the co-founder and CEO of Homewise, a company that helps people get great mortgages quickly and easily. Today, though, we're going to spend some time talking about a few things that people can do on their own, small mistakes they made. They may not even realize they're mistakes. They may be trying to do the right thing, but has an effect on the mortgage rate that you are going to get. And we're going to try to talk those through and see if we can help you avoid them. Jesse, welcome.
Thanks for having me.
Yeah, absolutely. So let's dive into it. We got a list of 5 things that people should be aware of, common mistakes that people make when they're going looking for a mortgage. Let's get it started. Hit me up. What's number one?
And number one, so you might have bought your home 6 months ago, possession date 6 months in the future, and you made the mistake of going out and leasing a new car. It happens a lot. You bought a new home. It's got this great driveway, garage. You can't wait to park your new car in. The problem is when you're pre-approved 6 months ago, you're pre-approved based on not having that car in your monthly expenses. So a big mistake a lot of people make is they start adding up debts before they move into the property. Don't do it. Not even small debts. Don't bring up the Visa card and a debt level you can't control, because when it's time for mortgage approval, 3, 4 months before you move in, 2 months before you move in, most lenders are going to want you to have external debts as low as possible.
So you get yourself in, you get yourself pre-approved, you're at that level. If you got that letter, try not to make any changes. Keep it nice and stable so everybody knows what you're looking at. They go look again. They're going to show they're going to see some consistency that you're showing them.
Exactly. And hey, if you're able to afford $900,000 before, you want to be able to afford $900,000 again when you're closing. So everything you can do to keep that number where it is, just lease the car after you move in.
That's great. And it's important to know we're also talking about leasing, not just purchasing. Leases also have an effect.
Exactly.
Great advice. Keep things simple, keep it consistent. Number two, this is a big one. I think whether you're looking for a mortgage or the best price on peaches at the grocery store. Tell me about shopping around.
Yeah. I always find it funny in the mortgage world because I speak to people who are going on vacation and they're checking 7 different websites to see what the best rate is. They're buying a pair of shoes. They're looking at 4 different websites to find the best price to buy the shoes at. But when it comes to their mortgage, they're like, oh yeah, my mom and dad bank with this place, so I'm just going to go there. Shopping around for your mortgage can save you thousands of dollars. And it's not just a couple $100 here or there. We see clients that went to their bank and then come over to us who are legitimately saving $1,000, $2,000 every single year for that 5-year term. So shopping around is really important on the rate side of things. But there's also people who we find who don't shop around who might get denied a mortgage approval from one lender that they go to and they think, oh my goodness, I'm never going to be able to buy a home because that lender didn't approve me. Well, different lenders have different qualification standards. So not only will you be able to potentially get a better rate and features by shopping around, you might get a worse rate somewhere else that denied you and a better rate at a place that approves you. So shopping around and working with a company like ours that could shop around for you is a great way to ensure you're getting approved, getting the best rate, and also getting the best features for your specific needs.
And one of the things you've also talked about is making sure you read the fine print. There's a lot of fine print there. What should they be looking for?
Yeah, I can't tell you how many people think bank means best when it comes to mortgage. The answer is bank could be best. And we love banks. We work with banks, lenders, monoline lenders, credit unions, all those things. But different lenders have different fine print. That could be things like a collateralized mortgage, which puts a charge extra on your home that at the end of your 5-year mortgage term, which is the average term people choose, you might have to a penalty if you want to change to a different lender because you want a better rate, you want to shop around. Or you might not have the same prepayment privileges. I know when I bought my first home, I wasn't married. When I bought my second home, I was married with 2 kids. Life changes. So having those prepayment privileges, having that ability to port a home from a mortgage from one home to another is really important to have. So understanding the fine print and key mortgage features is really important in the process.
That's great. Take a little bit of time, read through it. It's all words. We can figure these things out. Make sure you understand what's going into the mortgage that you got.
Totally.
Awesome. Okay, great. The third one, there is one big number. We all focus on that big number. Should we stay focused on that big number or is that a mistake?
Yeah, can't tell you how often I hear, what's your best rate? What's your best rate? And then we speak to the person and we tell them, well, our lowest rate is this, but this is a lender who works very slowly. They might not approve you. And we give them all this information. And then last minute, they hear from the lender, hey, we couldn't approve you. Thankfully, we got them a different mortgage approval that was 5 basis points higher and they got an approval. So don't just focus on rate because that also doesn't mean you're saving the most money. Sometimes those low rate options also have a lot of features that they're missing. And I mentioned portability before. If you're buying your first home, well, you might be buying your second home 4 years into your term and want to move that mortgage from the first home to the second home. So having that ability to have portability is really important. Prepayment privileges are really important to have because you might want to pay down your mortgage more quickly. The ability to take a mortgage vacation. You might have a new kid coming along the way and you might want to take a month off your mortgage payments. Not every lender allows that. So understanding all the different features that go into a mortgage could actually save you a lot more money than just focusing on rate, especially if you're on a fast timeline at a unique situation. Understanding the gamut of options and speaking to an unbiased advisor to provide you the best advice is a great way to make sure you get the best solution.
That's great. Getting through the bias, getting to what really is going to be matter for you, what's going to get you the best deal, and is going to be the most manageable mortgage for you. Might be not just in the rate, but possibly in some of those terms that are going to help you live and enjoy your house.
So I can't tell you how many times I hear from people saying, oh, the lender gave me a 30-year mortgage because I'm a great client. I'm like, well, no, you put 20% down. So you're able to get a 30-year mortgage. You could do 25 years, which actually is going to cost you less over the lifetime of your mortgage. So really understanding the fine print that sometimes a sales pitch is an important thing to understand.
That's great. All right, let's move on to number four. Number four, I think, goes into this idea of being consistent. Can you talk a little bit about job changes?
For sure. So when you're getting your mortgage approval 2, 3, 4 months before you move into your home, every lender is going to look at your bank statements, your job letter, try to understand that you have consistent money coming through the bank. You might have a great job and then get an even better job 3 months before you move into your home. And that could actually risk you getting your mortgage. The reason for that is they want to make sure that you're not in your probation period. Lenders want to keep risk as low as possible. So if you're in your probation period, they might think to themselves, hey, this person might not actually be able to get this mortgage if they end up losing the job in their probation period. So our suggestion to everyone is 6 months before you move into your home, don't go job searching. Wait for that until after you move into your home, because that could affect the fact that you could actually buy a property, even if your income doubles with that old job to your new job. So keep that in mind along your process.
Let me throw a challenge at you on that one. Let us say that the greatest opportunity happens to come along for a job change right during that period. What should people do? How should they think about taking that opportunity? And if they do want to take that opportunity, are there some things that they can do to help protect themselves?
So here's two things I would do in that situation. One is reach out to an unbiased mortgage advisor. That's the first thing I'd say. Anytime you have a question, companies like ours at HomeWise, we're able to provide you advice and can answer your questions totally for free. So definitely do that as your first step because you'll get some great advice there. The second thing is when you're negotiating that awesome life-changing job, tell them, hey, you really want me here? I'm buying a home. I can't have a probation period. So if I'm getting my job with you, no probation can be involved in this situation. That can often really help. And again, those are those unique situations that you bring up where having the right idea and having that knowledge before you take the job could actually save you from not taking that job opportunity and potentially losing out on the mortgage. So being prepared is a great way to make sure that you're aligned to get the job and the mortgage.
That's great. Make sure that you're talking to everybody, getting lots of good advice, listening to people, and sharing what your situation is. Good stuff. All right, we promised everyone that you were going to give us the 5 common mistakes. What is number 5?
So number 5 is banks want to make sure that you aren't committing fraud. As simple as that. So by doing that, they look at 3 months of bank statements for your final part of your down payment as well as closing costs. If your money is in 15 different places, well, they're going to want to track where that money is and where that money is coming from. So try to make sure that you have at least 5 months of your money in your bank account because the banks will look for that 3 months. If you're getting money from a gift from a family member, make sure that's documented. Your mortgage advisor can help you in the process. but ensure all your money's in your bank account because that will make the process very smooth.
Excellent. Okay, great. Those were five very common, very human mistakes that people make that hopefully we can help people avoid and make good decisions. Tell you what, just as the final kicker, someone comes up to you and they're looking to get a mortgage and they want one piece of advice and the light's about to turn green and they're going to cross the street. You got just a couple seconds. What's one piece of advice for people who are out there looking to have to get a great mortgage?
Don't go directly to your bank and get one option. Go to a mortgage advisor who's going to shop around for you. That's the number one piece of advice. You are getting someone who, for free, only has to pull your credit once to shop around with every lender for you. So that's the number one thing you could do.
I think that's a great piece of advice. If you are buying a home, you are almost by definition a great customer. Make sure you hold on to the power that you've got and use that to get a really good deal for yourself. All right, excellent. Jesse, it's been a lot of fun. I definitely learned a few things. Thank you so much for joining with us today.
Thanks, Gary. My pleasure.
All right, we will talk to you very soon. Thanks, everyone.